For decades, we believed a comforting lie, a lie so deeply woven into our lives that most people still cling to it today. We believed that banks are stable. We believed that the financial system is predictable. We believed that the worst crises were behind us. But in 2025, something began to shift quietly, invisibly, systematically, because beneath the surface of America's shiny financial architecture, behind its mobile apps, interest rates, and loan approvals, a hidden pressure started building, a pressure no one fully understood, and no mainstream outlet was willing to talk about until the first cracks appeared. A regional bank freezing withdrawals, a major investment fund suddenly halting redemptions, a tech CEO warning employees to keep cash on hand, a leaked internal memo from a large U.S. bank titled simply "Liquidity Exposure, Immediate Attention Required," and then silence. So tonight, we're going to unpack the truth behind the 2025 banking bombshell, what triggered it, why it was inevitable, and what comes next. Because this isn't just a financial story. This is the story of a system built on leverage, confidence, an illusionist system now standing on the edge of its most dangerous moment in decades. And the most unsettling part, to understand what's happening today, we need to go back, not months, not years, but decades. Because every financial crisis looks like it comes out of nowhere until you trace the thread back to its origins. This story begins in the 1970s, when the U.S. abandoned the gold standard and shifted toward a credit-based financial system. That single decision transformed banking forever. Suddenly, money wasn't something that was earned. It was created through loans. Banks were no longer vaults. They became factories that manufactured debt, the raw material of modern money. Now, in a system built on constant borrowing, one element becomes vital: trust. Because the moment people stop trusting banks, the system collapses. In 2008, we saw the first modern crack in this architecture, a crack so large it nearly swallowed the global economy. Mortgage derivatives imploded, Lehman Brothers fell, confidence evaporated, the Fed stepped in, rates were slashed, endless liquidity was injected. The message was clear: the system will be saved at any cost. But that victory came with a hidden consequence. It taught banks a dangerous lesson. If you take massive risks, someone will always bail you out. And this lesson shaped the next 15 years. To understand the 2025 banking bombshell, you must understand the environment banks operated in from 2010 to 2023. Money was cheap, interest rates were near zero, loans exploded. Speculation became normal. The tech boom accelerated under global liquidity, with startups raising billions without revenue and corporations building on massive credit. The entire economy became addicted to easy money. Banks, chasing yield, expanded into risky assets. They bought long-term bonds. They funded real estate bubbles. They invested heavily in tech, all while assuming interest rates would stay near zero forever. But then everything changed. Inflation surged. The Fed panicked. Rates rose at the fastest pace in 40 years. The system built on cheap money suddenly had to survive in an expensive money world. The weakest links began to crack. Between 2022 and 2024, three major stressors grew silently. First, rising interest rates destroyed bank assets. Banks held trillions in long-term bonds. When rates rose, the value of those bonds collapsed. A 1% bond becomes toxic when new bonds pay 5%. Banks were suddenly sitting on massive unrealized losses they hoped nobody would notice. Second, depositors moved their money out. People shifted cash into T-bills, money market funds, and high-yield savings platforms. Banks lost deposits fast. When deposits fall, banks lose their primary funding source. A silent liquidity crunch began. Third, tech companies and startups began withdrawing cash. With funding drying up, startups needed money to survive. They pulled billions out of regional banks. This was the spark behind the Silicon Valley Bank collapse in 2023, and it was far from the last warning. By late 2024, the system was trapped in a deadly triangle. Banks were bleeding deposits. Their assets were worth far less than reported. Loan defaults were rising. But the real trigger of 2025 wasn't a bank collapse. It wasn't a market crash. It was something far more subtle: new global liquidity regulations. In late 2024, coordinated international rules forced banks to hold more reserves, mark assets to market value, reduce long-term exposure, increase capital buffers. These changes exposed how fragile banks truly were. Suddenly, they had to admit the truth. Their balance sheets were far weaker than anyone realized. Within weeks, instability spread. A large European bank delayed interest payouts to U.S. pension funds, warned of liquidity tension. A major hedge fund restricted withdrawals entirely. This was not a meltdown. The fallout didn't look like 2008. There were no long lines outside banks, no ATMs running dry, no dramatic stock market crash. Businesses were denied loans, startups collapsed. Banks didn't stop lending. They simply made lending impossible. Consumers felt the pressure to higher loan rates, stricter approvals, frozen credit lines, delayed mortgage decisions. The real economy began to suffocate. But the most significant consequence happened behind closed doors. Policymakers realized the system wouldn't survive the next crisis. And so they began preparing something entirely new: a backup plan, a reset, a digital transformation of money. As the cracks widened, the government scrambled for solutions. The Fed opened emergency liquidity windows. Banks borrowed more than ever. It hid the problems, but didn't solve them. Regulators quietly relaxed rules, allowing banks to delay marking down losses. Another temporary band-aid: weak banks were merged into larger ones in quiet, overnight deals. Too big to fail became bigger than ever. Banks are strong. The system is stable. But insiders knew better. Congressional briefings warned of a 2025 liquidity event. Senators quietly increased cash holdings. Corporate CFOs moved treasury operations. Something was coming. Everyone at the top knew it. When you zoom out, the pattern is unmistakable. The credit squeeze resembles the 1929 pre-crash environment. The hidden losses look exactly like 2008, just different assets. Interest rate shocks have preceded every major crisis of the last 50 years. And each financial era ends with technological disruption. 2025 fits every one of these patterns. Here is the part no one talks about: the 2025 banking crisis. Isn't really about banks. It's about control. The old system, built on paper money, leverage, and exponential debt, is failing. Governments know this. That's why preparations have already begun for something called the digital dollar framework, a new type of money: programmable, trackable, centralized. In this system, stimulus can be forced, taxes can be automated, money can expire, accounts can be frozen instantly, spending can be controlled at the category level. The digital dollar is the destination. The 2025 crisis is the catalyst. By the end of 2025, 3 major developments are likely. First, more banks will quietly merge, not fail. Consolidation is the new bailout. Second, credit will get even tighter. Defaults will rise. Businesses will struggle. Loans will be harder to secure. Third, the digital dollar will be introduced as a solution to instability, not as a replacement for the current system. At least not at first. But make no mistake, it's the beginning of a reset. The financial system is far more fragile than it seems. Crises now creep. They don't explode. Debt-based money is reaching its limits. When interest payments exceed tax revenue, the system must transform. The shift to digital money is inevitable. The only real question is how fast it will happen. We are entering a new era, the most significant financial transformation in a century. Some people will be caught off guard. Some will lose everything. And some, the ones who understand the patterns, will position themselves ahead of the curve. What's coming isn't the end of the system. It's the end of a chapter and the beginning of a new one. If you want to stay ahead of the biggest financial shift of our lifetime, make sure you subscribe, because in the next video, we'll break down exactly what the digital dollar rollout means for your savings, your freedoms, and your future.